continuation? Or is that on the worksheet?
Well, we're doing another problem today,
Oh,
so I'll be giving you my papers.
okay.
All right, so in Chapter 4, we started preparing the worksheet, and not all companies will prepare a worksheet. If you're using a computerized system, you really don't need a worksheet. And some people call it just a piece of scrap paper, because it's just an in-house document. We do the worksheet so that we can show our adjustments. And we change some of our assets into expenses. The question was, why do we have to bring those accounts current? And it's one of our GAAP rules, and that is to match revenue with expenses. One of the adjustments that we did was for the inventory for supplies. And in some of the problems, they'll give you the ending inventory for supplies. In some of the problems, they will give you what we used in supplies, but they have to give you that number. We're not going to physically take the inventory to make that adjustment. I think you just need to remember that the adjustment is for the amount used. Now, your adjustment columns can be correct. The two numbers can equal, but you could use the wrong number. And then as you prepare the income statement and you prepare the balance sheet, then we're going to find that those numbers aren't correct. Right? And you'll have to go back and make those adjustment corrections. We made the accounts current just on paper, but we did not make those accounts current in the ledger. We have to do that with journal entries and with posting those journal entries. So in Chapter 5, we're going to cover recording the adjusting entries and then also closing the temporary accounts. And I'm going to try to divide it into 2 lessons. I hope that we'll get both of them finished today. If not, we'll have to finish the closing entries next week on Tuesday. So we'll start just recording the adjusting entries in the journal and then posting those to make the accounts current. Chapter 5 is just the accounting cycle completed when we finish with those closing entries. And I'll try to stop going through the PowerPoint when we get to closing the accounts. I've mentioned closing the temporary accounts in other lessons, but in this chapter we'll actually start doing that. We will close the temporary accounts, which are the accounts that are on the income statement. It's our revenue and our expenses. They don't last with us forever like our balance sheet accounts do. Those are called permanent accounts. So our objectives, we're going to journalize and post the adjusting entries, journalize and post the closing entries, and then we're going to prepare what's called a post-closing trial balance. What does post mean in that post-closing trial balance? After. So it's another trial balance that will run after we close the temporary accounts. All we're going to have left after we, or when we prepare this, will be the accounts that we started with in Chapter 1, before we had all of our expense accounts. It's our permanent accounts, assets, liabilities, and owner's equity or proprietorship. That's all we'll have left after we close everything. We're also going to see a new account in this chapter. Does anybody remember from the reading what it is? It starts with an I. Income summary. Income summary is just a holding account. We're going to put our revenue into the income summary. We're going to put the expenses into the income summary, and what we have left will be net income or net loss. Where's the normal balance for income summary? Some of you know it doesn't have one. It doesn't have the normal balance. We're going to close income summary to the capital account, which is what we've done when we prepared the statement of owner's equity. We added the net income to capital, or we subtracted the net loss. When we close income summary, and it will be the balance, that's the net income or the net loss, we'll close it into capital, and then capital will actually be current. It was never current after we completed the statement of owner's equity, was it? We just took that number that we came up with, but the actual ledger account was not current. So we're going to make it current in Chapter 5. The accounting cycle that we've done so far, there's a great picture in your book of what we did, the business transactions, and you're going to be doing that as you work through Sullivan. Source document recorded in the journal. We have to analyze those source documents to decide what the debit is, what the credit is, and then we're going to post from the journal to the ledger. You'll get that practice in Sullivan. We're going to prepare a trial balance, and you'll do that on the worksheet. We're going to finish the worksheet with the adjustments, the adjusted trial balance, the income statement, the balance sheet, and then the last step is to prepare the financial statements, the formal financial statements, the ones where you need the dollar signs, the single line where you added or subtracted, and the double line to indicate that we have a total. Here's what we're doing next, journalizing and posting the adjusting entries. Step 8, possibly today, journalizing and posting the closing entries, and then our last step, prepare the post-closing trial balance. We are preparing our ledger accounts to start the new fiscal period. In this book, it could be a month, but usually it's preparing it for the next year. Right? We just do it by month because we don't want to have 12 months worth of work. You're going to get 2 months worth of work in Sullivan, so you'll see what it looks like at the end of a cycle and then the beginning of the new cycle. So the last thing we'll do is to prepare the post-closing trial balance. When we prepared the worksheet, as I said earlier, we made our accounts current just on the worksheet. They're not current in the ledger. The ledger is where we list all of the accounts in account number order. We need to make those current by recording those adjustments. And the last thing, the books are not up to date or ready for the next accounting cycle until we do that. Use the adjustment columns to prepare the adjusting entries in the journal, and that's sort of common sense that we'll just take it in the same order that we recorded them on the worksheet, A, B, C, D, E, in that order. I noticed on some of your papers you didn't have the capital letter A, B, C, D, E, and you need to have that listed on your worksheet for your adjustments. Once we post, those accounts are going to be current. Here's our adjustments that we're going to be looking at, and we'll record them in just that order. A, and we'll put the debit first and then the credit. B, we'll put the debit first and then the credit. C, D, does this one have an E? No, it stops with D. We don't need to write a description because we're going to put a heading at the top of the adjusting entries. Usually the adjusting entries are on a brand new page in the journal. And when we do them today, I'm giving you a brand new page. Usually it's not page 1, it's page 2 or 3 or 4. I don't remember what my copy is. Oh, I did make it page 2 because it's usually not a page 1. Right, it's just a continuation in the journal. Here's what it's going to look like. We'll list the heading here, and that means that we do not have to write a description here. We'll still skip a line so that we have enough space there to make it look neat. Have these adjusting entries been posted?
Yes.
They have. All right. Now, in some of your problems, you don't post the adjusting entries, you just record them. If you have these numbers, I know that you didn't follow the directions if it didn't say to post. When do you put those numbers in there? Remember your promise to me? As the last step when we're posting. And if we get interrupted Or if you get interrupted when you're doing your homework, you'll know exactly where you left off with your posting. Did any of you get interrupted as you were posting transactions from the journal? You didn't get to finish the problem, but you knew right where you left off. So you made that promise. I'm going to hold you to that promise, that you don't put that number in there, that account number, until you finish posting. Again, no description because the heading is up at the top. All right, and I've already sort of gone through this. It just gets us ready for the closing procedure. When we post those adjusting entries, we're going to close the revenue, expense, and the withdrawal accounts. And accounts have two classifications, temporary and permanent. The temporary accounts are on the income statement. Right, those are the ones that we're going to close. The picture that I gave you with the ice cube, if you can visualize that ice, what happens to it when it sits out for a long period of time? It melts and it's gone. So that's a good way to remember those are the accounts that we're going to close. The balance sheet accounts are permanent. They'll stay with us until we actually close that business. They'll even stay with us if we sell that business, because whoever is purchasing our business will purchase our assets and will purchase our customer base. So we can sell that because it is something of value. That's the closing entries right there. Let's stop there, and then we'll go to recording the adjusting entries. And we're going to use the worksheet on page 183. So if you'll find the worksheet on page 183.
What page is that again?
183. How many more of those sheets do I need down that row? Two. Guess I didn't count correctly. Let me go make a couple more copies. I don't know. Oh,
Yeah,
these